There are two types of contributions, cash and checks and other property. Cash and checks normally are contributions to church and to nonprofit organizations like Jerry's Kids, the Muscular Dystrophy Association, the American Heart Association, and Easter Seals, just to name a few. Other property can also be considered a charitable gift, like your client's old clothes or furniture that she donated to the Goodwill or to the Veterans of Foreign War. It could also include stocks donated to a church or other organization. If the other property has a total value that exceeds $500, then you'll need to prepare Form 8283 to support the deduction. This form will instruct you on the type of documentation necessary based on the type and amount of the deduction. Since donations of other property over $500 are rare, you won't often encounter them. Many nonprofit organizations solicit contributions. For the most part, these are reputable, qualified organizations. Occasionally, on the other hand, they may not qualify, so any cash or other property contributed to them is not deductible. As a general rule, donations to churches, schools, governments, and public charities qualify. If you're unsure, check out the IRS website to determine what organizations are authorized for deductible contributions. Contribution deductions can be limited. Normally, if the total contributions on Schedule A are less than 20% of the adjusted gross income, you usually won't have a problem. But once it exceeds 20% of adjusted gross income, you'll want to pay more attention. There are restrictions on the amount that can be deducted in any given year. In addition, there's a rule under the Tax Cuts and Jobs Act of 2017 that allows a deduction of up to 60% of AGI for donations of cash only. Look at the rules in your workbook for additional details. What happens if you can't deduct all your clients' contributions in the year they were paid? They can be carried over to the next year. You can carry over the excess amount for up to 5 years.